new IRD survey shows that the wealthiest Kiwis in New Zealand pay less than 10% in terms of effective tax rate, compared to the majority of the middle-class Kiwis that pay around 20% in terms of effective tax rate. This is mainly due to the fact that the wealthy or the ultra-rich gain a significant amount of income from untaxed capital gains. One of the most special things about New Zealand taxes is that New Zealand don't have a capital gains tax. So it is one of the very few countries in the world that don't actually have a capital gains tax. Now this short list includes Bahrain, Barbados, Belize, Cayman Islands, Isle of Man, Jamaica, New Zealand, Sri Lanka, Singapore, and some others. The IRD survey gathered data from over 300 families with an average net worth of more than 276 million New Zealand dollars. They are truly the ultra-rich in New Zealand. In terms of personal tax rate, the wealthiest people in New Zealand paid around 30% in taxes, but that only contributed to 7% of the income that they get. Majority of their income comes from financial portfolios such as shares or businesses and other income from trust. Overall, more than 50% of their income actually come from trusts. The project director also said that these results are very comparable to the 400 wealthiest families in the US, where they pay an effective tax rate of 8.2%, which is fairly similar to the findings from New Zealand. Now, to be fair, one of the things that these articles usually fail to mention is that these ultra-wealthy people usually end up paying most of the taxes here in New Zealand, although at a slightly lower rate than the middle-class citizens. As a comparison, I love bringing up the personal income tax rate for New Zealand compared to our closest neighbor, Australia. So for New Zealand, you get 10.5% tax up to $14,000. And up to $48,000, you get 17.5% tax. And from $48,000 up to $70,000, you get 30% effective tax. And from $7,280, you're getting a 33% effective tax. And for the remaining income above $180,000, you are now getting a 39% tax. This compared to our neighbors in Australia, where if you earn under $18,000, you actually get no tax on this income. And from $18,000 to $45,000, you're getting 19%. From $45,000 to $120,000, you are getting 32.5%. From $120,000 to $180,000, you're getting 37%. And from over 180, you're getting 45% tax. So basically, in Australia, at the lower end, you're getting taxed less, and at the higher end, you're getting taxed more. Now, many people believe that this is actually a better system than the system that we currently have in New Zealand. What many people in New Zealand believe is that you probably shouldn't tax the capital gains for the property that you yourself lived in, but tax capital gains on any sort of investment properties. So this whole research sparked a big debate on whether or not we should introduce capital gain tax here in New Zealand. The debate kind of goes backwards and forwards, but ultimately I do see at some point in the future that there is some form of capital gains tax being introduced, especially since the government has been spending a ton of money. So, I mean, what other easiest way than to recoup these money than to introduce a capital gains tax? You know, this is literally the easiest way, because why curb their spendings when they could just basically increase taxes?